Hello everyone. This is the pre-market report video for today, 12th August 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, quick takeaway from yesterday's Indian market. In the last pre-market video, we discussed about the new scheduled meeting between US and Russian president on coming Friday in Alaska, which itself slight positive for global momentum. In addition to that, SBI posted a very good quarterly results, so its share price increased above 2%. Hence, all these made the Nifty to have either short covering or the technical bounce, since Nifty kind of in the marginal oversold region. Sector wise, all the major sectors closed positive. Here, PSU Bank was the top major sector, increased over 2%, followed by realty, defense and auto increased above 1%, all due to the respective sector stock quarter results. However, if you see overall, it was not that positive. The advanced return ratio is 9:8. Slightly more number of stocks closed positive than it declined. Whereas about institution, FII again turned back as net sellers. They net sold for 1200 crore rupees and DII net bought for near 6000 crore rupees. Then moving to the participant wise open interest. In the index options, this is where it gets interesting. Near 10% of the call options got unwound. Particularly, FII unwound 15% of their sold call options and proprietary traders unwound near 20% of their call options. Then in the put options wise, 34% of their open interest newly added yesterday, which in turn increases the PCR ratio from 0.67 to near 1. Hence, there was a massive change in the stance. Just for reference, this is the yesterday morning before our market opening stance that now in the evening turned to this. The main stance change is from proprietary traders. From massive net 7% open interest on the bearish side, proprietary traders dropped to net 0.2% of their open interest on the bullish side. In one session, they did the complete return to neutral. Whereas in FIA case, from net 10%, they reduced marginally to net 8% open interest on the bearish side. And on the positive side, retail traders having net 9% of their open interest on the bullish side. Please note, as it happened like yesterday, both FII and proprietary traders, they got lot of money and margin, so they could change their position on any day, anytime. Then in case of index futures, FII maintaining their 92% open interest on the short side. Similarly, client and proprietary traders maintaining their 70% and 60% of the open interest on the long side. Hence, considering all, FII makes more money if market expires negative. They were net call option sellers and net put option buyers, meaning they are expecting the range bound on the upside and breakdown on the downside. Whereas client or retail traders makes more money if market expires on the upside. Here they were net sellers on both call and put side, considering that they are expecting range bound on both sides. On the other hand, proprietary traders were net buyers on both sides, so they make more money if breakout on either side. Hence, those were the quick takeaway from the yesterday's Indian market. Then coming to US market, at that time there will be two important events which is due. One, as we discussed yesterday, tonight US inflation data is scheduled to release, and already analysts predicted that due to tariff which expects to increase. In addition, another one, at the end of today, 90-day tariff pause between China and US is set to expire. Here, Chinese trade negotiation team expects to announce another extra 90-day pause, but US Trade Secretary said it's up to Trump, and Trump warned last week, like India, if China didn't agree on trade deal means, then he will place 25% penalty for Russian oil import kind of. So please note, at that time, which in turn increases the chance of trade war, and all these kind of makes the US market and global momentum to pause. Dow Jones decreased by 0.45%, S&P 500 was down marginally 0.25% and Nasdaq decreased 0.3%. In case of VIX, it increased 7% and moved above 16 from 15. However, after the US market closed, it's reported that Trump agreed on pausing the China tariff for another 90 days, meaning till November 9th. Please note it's reported, no official confirmation. I mean, China do got the cards and Trump can't treat China like India, as then China will simply say they won't give rare earth metals. Either way, it's single out India, but it's positive for global momentum. About oil, no major change, marginally increased. At the time of this video, WTI crude trading at 64 US dollars per barrel and Brent crude trading at near 67 US dollars per barrel. Regarding Indian ADR, as it is all closed on the negative note under 1%. However, on the Indian market, most of the following stocks closed positive. Hence, both IT and banking stocks ADR, including Reliance GDR, all having the negative arbitrage of 0.5 to 1%. About GIFT Nifty, in line with US market and Indian ADR, it also decreased some and today morning traded at 24,552, equating that with the spot market. For now, it's indicating the gap down opening of 50 points. As a summary, global momentum is paused because of US consumer inflation data. So either way, we could expect that related short covering or profit booking. In line with GIFT Nifty and Indian ADR, for now, it's indicating gap down opening. Moving on, as per stock open interest, Blue Star, Amber Industries, Page Industries, Voltas and Britannia are some of the 32 stocks that got an increased open interest along with a negative close, indicating the short build-up. On the other hand, Suzlon, Indian Bank, Nuvama, Fortress, Inox Wind, Eternal and Delivery are some of the 81 stocks that got an increased open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, around 2:30 p.m., Germany's economic sentiment data is due, and in the aftermarket hours at 4 p.m., India's consumer inflation for July month is scheduled to release. Then in night for US, their consumer inflation for July month, EA short-term energy outlook and Fed budget balance are the important items we need to keep an eye out today. Coming to technical, Nifty opened flat, however, it added over 200 points throughout the day and closed above 24,550. Thus on the daily chart, Nifty formed a bullish candle with minor upper and lower shadow. In addition, it negated the lower high and lower low formation it formed for the last 3 sessions. Then it entered back into the lower Bollinger Band and RSI indicator managed to increase above 40 mark from around 30. So those were the positives. However, it still trades below the 100 exponential moving average around 24,620 mark. So this 100 exponential moving average is the critical zone. Sustaining above could push the Nifty potentially to 24,800 to 24,850 zone, which coincides with the midline of the Bollinger Band and 50-day exponential moving average. Trading below 100 exponential moving average could increase the negativity in the market. In that case, 200-day exponential moving average 24,200 is the critical support area. Then moving to Bank Nifty, it had the similar price action as Nifty, opened flat and increased throughout the session for near 1%. Thus on the daily chart, it also formed the bullish candle and negated the lower low formation. In addition, it comfortably trading above the 100 exponential moving average around 55,000 mark, which expects to act as the crucial support, and on the upside 50-day exponential moving average around 55,900 mark could be the potential resistance. Just for info, still RSI and MACD momentum indicators having the negative stance. Regarding the weekly options front, the maximum call option operators was at 25,000 strike, followed by 24,600 and 24,800. On the put side, the maximum open interest was at 24,400 strike, followed by 24,500 and 24,000, with maximum new put option writing at similar strike price. Thus, from options data, it's suggesting immediate resistance at 24,700 to 24,800 levels and the immediate support at 24,400 to 24,300 zone. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.